Good afternoon, everyone, and welcome to Stock Market Today for Thursday, February 12th. It's Alexis Garcia here, and a sell off in stocks knocked down some of the major indexes on Thursday, with the S&P 500 undercutting a key support line and the Dow retreating from the 50,000 level. And here with me to help break down everything you need to know about today's trading action is IBD news editor Ed Carson. Ed, great to see you as always. A little bit of a scary Friday or scary day ahead of a Friday the 13th here, Ed, for traders.
I
What's out there today?
Yeah, the slasher film came out early, and do we need to break down anything further? I feel like everything broke down enough today, but I want to take a look at CH Robinson Worldwide, one of the biggest hit out today, as well as two staples that are doing pretty well, McDonald's and TJX.
All right. Well, we'll get to those stocks, but let's just check in on the major indexes. The S&P 500 falling 1.6% today. The Dow down 1.3%. The Nasdaq down 2%, and small caps down 2.2%. So let me get my charts going here, Ed. But again, it seems like we're seeing some renewed fears here of this AI thesis here that's been powering the market. We see SPY here, ugly downside reversal day, breaking the 21 and 50-day lines.
Yeah, there's a few things going on. I mean, there's AI disruption fears, which have hit software for a while. The fears that that some of these incumbents will be just overwritten pretty quickly, and but it's spread to several other industries. Trucking was an industry this time, but we've seen plenty of industries. There's also just concerns. Memory prices are surging. That's good for the memory stocks, but it's bad news for all these companies that use memory, like Cisco, and then the other companies that are spending lots of money. That's good for some A stocks, but we're still seeing that weakness in Amazon and Cisco and so on. So there was just some weakness. There was a lot of weakness today, and it's been a frustrating market. SPY going through the 50-day line. It's not decisively below the 50-day line, but it's not great. And it's something David Ryan was saying is that we've had this tendency for the last few months of a few days up, a few days down. Makes it hard to know. Is this the beginning of a sell-off, or is this almost the end of a sell-off? I don't know. And that's the same thing with the other side. Just when you see some strength, that's when the market seems to pause. It just sector rotation and such. It's all of these things just make it. The market is more volatile than even the S&P has been showing over these last few weeks. Just makes it a difficult environment to be trading in. And I think that most investors should be looking to see how can I tap on the brakes versus step on the gas.
Right. It's been a roller coaster and just so hard to identify any kind of trend. So, what level are you looking at here then? Maybe the low here from the fifth, that's about 675.79. Because again, one good day, this could be back up to record highs almost. So, what levels are you watching for?
Yeah, I think that undercutting there, that would be a big deal. And there's a lot of other things. We'll look at some of the other indexes. The Nasdaq is almost there. It almost at the January 5th level, and that February 5th level is even worse because that's already undercutting some other lows. So it gets below there. All of a sudden, the next target is below 22,000, and that longer term thing. So, and then the 200-day line, which would be creeping up. So, that's the laggard there. The Dow has been a strong sector. It's only 30 stocks. It's only came down to the 21-day line, so not that bad. But again, wouldn't one good day, it's at new highs, one bad day, and it's at the 50-day line. So, uh, that just back and forth. IWM, yeah, a day ago it was flirting. It was pretty close to record highs, and here it's not too long. Basically gave up its the buffer zone between it and the 50-day line. That's sort of gone. So if that went below the 50-day line, I think that would be and that would be quite concerning as well.
Yeah, let's take a look at RSP. That's the S&P 500 equal weighted ETF, trying to just getting a gauge of market breadth. Again, this one reversing lower today, down 1.3% here, Ed.
Yeah, so obviously this had a bad day like everything else, but it hit a new high intraday. I mean, so this is why it's been so maddening. I mean, the Nasdaq looks terrible, the S&P is weakening again, but RSP really is at record highs. I mean, So, it just makes it that much harder to know, where the direction is. And when you don't know where anything is going, it's hard to have an edge. And so you should tread lightly, especially with new purchases. It's one thing if you own stuff for quite a while and you have big gains. It's like, okay, I'm going to let it ride, blah, blah, blah. That's different. But with new purchases, it's just really hard. Some will work, some have worked, but it's difficult to do it. Either don't do it or just be really quick to cut the losses on the ones that don't work. And probably not many work today, that's for sure.
And we're also in the thick of earnings season, which is just adding a little extra spice there, Ed. I know we've got NVIDIA still kind of out in the ether there. We're looking at the 10-year Treasury yield, this down 1.6% today. It has been kind of hanging out around this 4.2 level, but falling today.
Yeah, a few weeks ago we were at 4 or 5 months highs, and this was a 3 month low. I mean, just barely, but it's all the way back to where we were, quite a while ago. So it, it's a real shift. There's been some weaker economic data. You could look at things, depending on things, and there's a flight to safe haven. For whatever reason, there's a safe haven flow back into treasuries and away from, for whatever reason, silver, say. I mean, silver SLV has been this huge, there was that huge rush into it. And, it was a bad day today. Again, we've had a lot of bad days after a massive run. And so, for whatever thing now, there seems to be a safe haven back into treasuries. And yeah, so that by itself is good for stocks, but it's a reflection of some of the risk off that we've been having in the last few weeks.
All right, well, let's take a look at some ETFs, starting with ITA. That's the U.S. Aerospace and Defense ETF. This one up about 0.7% today, Ed. It fell off those intraday highs, but notching a gain here just above a buy zone.
Yeah, this was acting pretty well. I mean, yeah, it came off highs, but anything that shows a rise is, on a day like today is pretty good. There was a number of positive earnings reports in the sector. Some other big names were sort of moving up, at least intraday. I think this was added to swing trader. I mean, it fell back from there, but I think if it got above today's highs, that could be one way to play it because a lot of things are extended. And so that would be a way to play the group, which seems to be doing pretty well. Again, not sure if that will work, again, with the market, how it is, but an ETF might be a good way to go, with this sector right now.
All right, so potentially actionable at the 237.15 level here. Let's take a look at chips, ticker SMH, down over 2% today. But, this has been an area of strength here, Ed. Um, so, thoughts on this chart?
Yeah, so definitely some weakness today. It's actually sort of intraday it was looking better, but there was definitely some losers. But this is one of the better ways to play it because some of the hottest things, I mean, there's Micron and other things, but it's a way to play some of the hot names in memory and chip equipment that is extended for the most part. And then, that is one of the better ones to play. But yeah, it doesn't seem to be particularly in position right now. And this is one of the stronger areas in the market, and it's down 2%. So there you go.
Yeah, and let's just look at IGV. That's the software ETF, and again, just continuing to get pummeled here, down 2.7%. But I mean, we've seen just this major downtrend here with software stocks.
And I think this is important. It's not so much, okay, the last couple days, it's see that bounce. We had that bounce for a few days.
Mhm.
Bounces can happen. Some of the best days now, I mean, we're talking about markets. The best days in the market tend to become in bear markets, and this is a sector sell-off. But you can imagine software having one of its best days ever in the coming days. But one day won't mean much. And that goes for individual names. Individual names might have a good earnings report. And that's so far lately, rarely has that worked. That still seems to be triggering sell-offs, but you can see some stocks having good days on earnings in the midst of a market or sector weakness, but then it just continues on. Then it's like that's one day and then it falls off. So you're going to need to see a lot more. And we've been saying that for a while. This needs a lot of repair work. I don't know when that'll come. It could be a substantial time before people feel comfortable with it. And they may not. I mean, there may be a fundamental revaluation of software in a lot of other sectors. I don't know. The market is going through that right now. And maybe this is like a deep seek moment and everybody realizes AI is not going to disrupt this stuff. But right now, that's not where we're at.
And let's take a look at XLF. That's the Financial Select Spider ETF. This one down over 2% today. Again, breaking the low of this flat base here at and well below the 200-day line.
This is involving some of the disruption fears. I mean, there might be some yield compression stuff, but there's some real issues here, and we'll get to it a little bit later when we talk about C.H. Robinson. But just a lot of individual names that have really come in hard, including some giants have had some tough times too. So, a sector that was doing all right, is really starting to look weak now.
Yeah, let's wrap up with IYT. That's the iShares Transport ETF. This one falling 2.6% today. But, the area of transport has been holding up relatively well here. So, again, hit a high, intraday high yesterday, but again, falling back and flirting with the 21-day.
Yeah, there's some disruption stuff, and I'll get to that soon. There's also the airlines fell again. I don't know exactly what's going on with the airlines, and there was good news for transports. The FedEx had basically guided higher for the current quarter. That's one of the biggest names. It's like, oh, here we go. But even so, this group just had a really tough day. And again, yeah, so that's an issue. Certainly, why we don't want to buy extended is certainly in a sideways market because you don't know when things are going to roll over. But yeah, this has been one of the strongest sectors out there and really got hit today.
And let's go ahead and take a look at some individual names. You've been mentioning C.H. Robinson worldwide. This one down 14.5% today, and again, falling below these 21 and 50-day moving averages.
Yeah, so we'll see how this. There's some company, I think it used to do karaoke machines, and I guess they sold off that unit, but they came out with some kind of coding that suggested they could, handle a lot of the things that these logistics firms do in the trucking space. I mean, I don't know how you can get the thing is, people could probably do things roughly well. Can you really how much can you get in there because in those fields, but this got whacked. I see, we also had like JB Hunt, is another name just in there, just so it's not just CHR Robinson. That one had a big stop. So there's a lot of losses here. Just the fear that AI could quickly go in a lot of data heavy, labor heavy tasks that can be automated with a lot less stuff. And these companies are probably going to be using AI anyway. So there might be disruption internally for those workers. But then the threat is that no, maybe the companies themselves will be disrupted very quickly. Just to show other things that have been out there, Schwab, got hit pretty hard. A lot of brokerages, wealth management firms, because there's some company came out with some tool. Who knows if anybody will ever use it, but wham, that just came down really hard. There's a lot of other names, and this other name is not as hard hit, but it's a huge name. JP Morgan is just another thing, just to show how that at first there was like, oh, not too bad, but they have big wealth management arms, and you can see it's had a pretty significant drop the last 3 or 4 days. CBRE, is real estate real estate, commercial real estate brokers. Wham. Okay. I mean, just out of nowhere. They also had earnings and they weren't perfect, but that's really about the AI disruption. And looking further back, there's something like Expedia, which actually had earnings after the close. But the travel firms, you see there's been a couple of sell-offs. One was like a couple of weeks ago, where it's just like, oh, they could get disrupted. So all of a sudden, it just makes ads onto it. I know there was a lot, but it just keeps on coming. It just keeps on coming. Maybe that will turn, but it's making it really tricky. These areas that were doing quite well just have the rug almost just literally pulled under you, and just like it's just out of nowhere, really tough. And just investors have to be aware of that.
Yeah, let's just take a look at MCD. That's McDonald's. One doing well here today, up 2.7%. Looks like it tried to break above this flat base 326.32 pivot point, kind of move sideways, but a powerful move today into the buy zone.
Yeah, so nice move here. The revenue and earnings growth about 10%, and that's better than we've had for a while. I mean, again, other companies go, what, 10% growth? That's nothing. But, for McDonald's, that's not easy. And they seem to be pretty bullish about the future. And we've just seen a rush into staples, consumer foods, some of these, some of the cheaper fast food discounters, which we'll get into as well. that's just where the market's going right now. So this was nice action. You can see how the relative strength line has really ramped up. It was nice to see this pause because it had run up, but then it paused right before earnings. Unfortunately, so it broke out on earnings. So it did provide an opportunity. Again, if we do get risk on, will these names really lead? They could easily fall back. But yeah, nice action on some solid numbers today from McDonald's.
Yeah, and you were mentioning discount retailers. Let's take a look at TJX. This one up over 2.5% today, reclaiming the 21 day, and looks like right at the 50-day line here.
Yeah, so I think the high from a couple of days ago, if it got above there, that could be actionable as it sort of works on an emerging consolidation here. We'll see. Some of these names are doing well. If you're thinking a little bit shaky on the economy, but not terrible, discounters can be a good way of going about that. I mean, a lot of discounters are doing well. Obviously, Walmart has been doing great, but that's extended. That has earnings next week, and TGX has the following week, so that'll be important. But just this has been one of the if you go on a monthly chart with TJX, this is at times has had really strong performance. The relative strength line always been a world beater, but over time it's been trended higher, and sometimes it's had some really big moves. So this is not one to ignore at all.
All right, so we'll be looking at that 157.16 level there as a potential entry point. So, Ed, I know you wanted to maybe look at some names after the close that we're reporting. We have Applied Materials up over 9% after hours.
Yeah, pretty solid earnings, it looks like, and guidance as well. So this one technically there was like a 3 or 4 weeks tight. I don't know what you could have done with it. Now it's we'll be gapping out of that, so it's going to be pretty far above that area. I get and so but really nice. It's been really doing well. And this is probably good news for a lot of other chip equipment makers as well.
Yeah, let's look at ANET as well, out up over 10% after hours here, still on the weekly here in consolidation with a 164.94 pivot, but perhaps an early entry here, Ed, with the recent high of 151. Is that what you're looking at?
Yeah, I think that could be, right there. It held up reasonably well today despite Cisco's sell-off. I mean, so that was interesting that it held up. I mean, obviously Cisco had run up where an Arista, Cisco had run up where the Arista had been falling back the last couple of weeks. So it's easier to hold up when you've already fell back. But growth accelerated a little bit for Arista. I don't know about the guidance going forward, but obviously strong reaction here. But can it hold up again? Can it run up and then will it fall back after that one day? So that's something I think investors definitely need to be thinking about in this kind of market.
All right, Ed. Well, thank you so much for your insights today. We really appreciate it.
Thank you, Lexi.
All right. Well, that wraps it up for us today. We'll be back with more market analysis starting tomorrow morning with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And Justin and Webby will be back tomorrow with the extended version of Stock Market Today. So they'll see you back here tomorrow right after the close.